It is Friday, October 3rd, 2025, and I officially hit 300K today. So yesterday, I don't think I hit 300K, so I didn't want to say yesterday was the day of my milestone, but today I did officially tag 300K. So basically, I am 30% on my way towards being a millionaire. And honestly, I don't really know how to feel about this because on one hand, I am happy that my portfolio has gotten to where it is currently very rapidly. Because if any of you guys are my long-term viewers, you guys will remember that I actually dipped below 100K and I actually dipped down into the 70s earlier this year during April after I hit my milestone of 170K, right, towards that peak. So literally within 1 year, I hit my milestone of 200K. I dipped below 100K into the 70s almost. And then I went all the way back up to hitting another milestone of 300K. And I remember seeing all those posts on social media of when people say, oh, when you hit your first 100K, that's when everything changes. And I always just thought that that was just some inspirational or whatever motivational post that people on social media just whatever they put up for likes and attention. But in my case, it actually did come out to be true because last year around November, I want to say, you guys can check my videos to get the exact date or whatever, but that was when I hit my first 6-figure milestone. So my first 6 figures in any account ever. That was the first time in my entire life I ever had 6 figures. And that was towards the end of last year. So it hasn't even been one full year yet. And I already hit another milestone of 200K, which is doubling that previous milestone with no deposits at all. Then I dipped below 100K again, which was kind of scary. I almost got a margin call. And then I came all the way back up to 300K, all within 1 year or less than a year. So it's kind of scary. And it's kind of worrying me because of all of the euphoria and greed that I'm starting to see in the market. But it also kind of gives me hope because if I can triple my account that quickly from my milestone last year of 6 figures, of course, from that first 100K, I have now tripled my account with no deposits at all. If I'm able to do that, well, then surely I'd be able to hit 1 million in no time, right? Because another triple from here is almost 900K, right? So like I said, mixed feelings all around. I don't really know how to feel about it. On one hand, I'm happy about it. On the other hand, I'm kind of worried because it feels like there's a lot of greed in the market, especially when it comes to Robinhood stocks specifically. Most of my gains are from Robinhood, of course. Obviously, I have Palantir and SoFi and some of these other stocks that have done pretty decently. They've at least outperformed the market. But let's be honest, most of my gains are from Robinhood. I mean, I remember, like I said, last year I hit my 6-figure milestone, and now I have over 200K just in one stock. It definitely feels like there's a lot of FOMO surrounding Robinhood on social media. And I think a lot of people have already come to terms with stocks like Palantir and Tesla, where people already understand that Tesla might be a little bit unreliable fundamentally when it comes to the numbers, and not just volatile as a stock, but volatile as a company where the lows are pretty low and the highs are really high, right? So people already understand that when it comes to Tesla. When it comes to Palantir, I think the overall consensus, people understand that Palantir is overvalued and a correction is due for that stock. It's very risky and difficult to short a stock that's like Palantir. It's a company that has performed tremendously, obviously. Lots of momentum behind the stock price, lots of momentum behind the company. So it's very difficult to short it, but people understand that it is an overvalued company. But Robinhood is a little bit unique because I would say Obviously, I don't have the numbers right in front of me right now, but I would say out of the three of those stocks that are very popular within retail, I would say Robinhood is the one that is a little bit more reasonable when it comes to valuation. Now, we are starting to get to a point where, if we take a look at the stock price right now, it tagged 150 today. And I did say in previous videos that at $100 a share, you could make an argument that it's fairly valued. But now at $150 a share, and I think I saw on social media that Robinhood is like 25% away from overtaking Charles Schwab in terms of market cap, which is ridiculous. But at the same time, it's so hard to bet against the company that is constantly rolling out new features, that is constantly building new streams of revenue. And even though it is very difficult to bet against Robinhood, I do think there's just a little bit too much hype, right? Obviously, the company is performing very well and they're executing very well, but the stock itself, I think, has gotten a little bit too excessive, which is why I have all of these covered calls just to protect myself a little bit on the downside. But speaking of Robinhood, I did go ahead and test Robinhood's travel portal. And basically what I did was I had Robinhood's travel portal on one side, and then I had a Google search on the other side, just so I can quickly pull up like some comparisons when it comes to like hotel prices and whatnot. And I was actually fairly surprised at how much better Robinhood was when it comes to user interface. Like, I actually enjoyed using the Robinhood travel portal much more than Google. Obviously, I can't compare. Well, it's not fair to compare Google and Robinhood's travel portal. It'd be a little bit more fair if I compared it against like Expedia. But nevertheless, just for simplicity's sake, I did enjoy using Robinhood's travel portal. And the prices for the hotels, for the exact same hotel, it was actually cheaper on Robinhood, which was kind of surprising to see. And they gave, I believe they give that 5% cash back on top of the discount for being a gold member. So I was fairly surprised by that. But just to give you guys a quick overview for anybody that's new here, I know I've gained a pretty decent amount of subscribers recently, mostly probably because of Robinhood stock's performance. So I'll just go ahead and give a quick overview of what my portfolio looks like, and you guys can kind of see about when I started investing in these companies. So obviously Robinhood being my top gainer, Nike still slightly down, Palantir another big gainer for me, Pepsi still slightly down, same thing for REPX. SoFi is starting to be a decent gainer for me here recently. We also have Honest that used to be a big gainer for me, but then I doubled down and then the stock started going down, but I fully expect a turnaround for that company. PayPal, obviously that stock doesn't do anything. MAA, which is a REIT that I've been slowly building up, still slightly down. And of course, American Express that I've more than doubled my money in. And if we take a look at some of my total gains, over 200K in pure profit for Robinhood, which is amazing. And that just goes to show y'all, anybody that is watching this and is brand new in the market, obviously I am not a financial advisor, but I will say having a very concentrated portfolio with above average timing can really make or break your portfolio, right? And obviously my long-term viewers already know this about me, but my example would be Robinhood. And when I bought it, it was during the 2022 bear market when Robinhood was under $10 a share. I was building up a big position in it. And as we started climbing out of that bear market, entering this new bull market, I did not cap out my gains at all. I was there for the ride, even though my portfolio is very concentrated. I tried my best to diversify a little bit. As you guys can see, I've been building up Nike, I've been building up Pepsi, whatever, REPX, a little bit of SoFi, Honest, MAA, of course. So I tried to diversify a little bit, but I let my big number one winner just continue to go up. I did not mess with it at all. So having above average timing with, a good stock pick with high concentration in it can really help you outperform the market. So if any of you guys are new, just kind of keep that in mind. Now, if we go over to my Roth IRA, it's also been doing pretty good today, mostly because of Chipotle. So Chipotle is my number one position in my Roth IRA. If we take a look at the total percentage gains, it is up over 5% now. Sweet Green still slightly in the red. Cava slightly green, not really doing much today. Let's look at the percentage gains for the day. Yeah, up only 0.5%. Sweet Green up almost 2%, but Chipotle being that big winner for me. And then, of course, unfortunately, we have GRND that's down 420. So it has been a disappointment for me recently, down almost 8.5%. So Grinder has been grinding me, unfortunately. And finally, I get to your guys' comments on my previous videos. So first one we'll start off with is FW Productions. He says, don't know how you don't have more subs. Congrats on your great timing on Hood. I wish I was a part of it. Keep it up, bro. And I appreciate the kind words. But most likely the reason for my lack of rapid growth, I guess you could say, even though my portfolio, or not my portfolio, well, I guess, yeah, my portfolio and my YouTube have been growing consistently. I guess one of the things that's holding me back is not having an actual setup, right? A setup with like a nice background, good camera quality, whatnot, nice organized videos. I just kind of wing it. You know, I hit screen record, I plug in my mic, and I just start rambling. But I do have plans in the future of increasing my the quality of my videos, but I do appreciate the kind words. We have Lint Away Duck Cleaning that says, I was waiting for your update knowing you have a big hood position. Congrats, brother. I appreciate that. We got Can't Stop Swamp saying, trying to get like you. I appreciate it. We have Some Dry Suck. Okay. He says, good job, man. I'm still working my way to the 6-digit club. Once Robinhood takes a dip, I might buy, but I'm sitting out for now. I'm thinking when the job market report comes out, there will be a big decline. I've been hearing that there may be a decent amount of jobs lost recently. That is according to mainstream news. So who knows how true it is, but I'm still playing it safe for now. Wondering what event, if any, you think will have people selling off their stocks. So honestly, dude, completely random when the stock, or what the news is when stocks start going down, right? If you haven't heard already, there is a saying in the market that says prices move and then the news follows. So stocks have to go down first, or at least that's how usually it works, where stocks will start going down big and then people will just start looking for excuses. Correct me if I'm wrong, but I do think people were talking about, you know, the situation that we had in 2020 before March 2020 when the market took a huge dive. So people were already aware of it, but because the market seemed okay, no one was really worried about it. And then, of course, the market started going down heavy, and then that's when everybody just conveniently started to care about it. And I don't want to say paying attention to job reports or anything like that, the news, I don't want to say that's a waste of time, but when it comes to the stock market and investments, something that I've noticed is it doesn't really matter, to be honest. The market, sometimes it'll go down because there's a bad report, and then people will say, well, obviously the market's down because just look at the news, you know, we have this bad report. Or sometimes the market will actually go up on a bad earnings report or job report, whatever. And then people will say, oh, the market already knew this was going to happen. You know, all of this news and fear, it was already priced into the market, right? All the sellers have already sold, so that's why it's going up right now. So people will make excuses all the time as to why the market moves one way or the other. So it's kind of a waste of time to trying to figure out why the market does what it does. It's usually best to just keep an eye out for good companies that you want to buy. Pay attention to the actual charts, right? Like the technicals of the stock chart. And of course, paying attention to fundamentals and where you think these companies are going to go, looking for that next big hit, right? So obviously Palantir and Robinhood, they were major hits for me, but I'm trying to look for that next one. So to answer your question, literally any event can send the market down. The market just moves and does what it wants to do, and then the news will usually just pick an excuse, right? So that's kind of how I've always looked at it. We have leave no evidence that says sold max covered calls on Hood at 123. Boy, that was a big mistake. I hope we tag 130s again so I can at least break even and get out of those. I played it safe and I had 165 and 170s for December 19th, so we will see as time goes. And man, I know I don't remember exactly how much you had, but I know you also have a very big Robinhood position, even bigger than me. So having covered calls at $123, that must have hurt. But yeah, I hope that we see a little bit of a correction here shortly. If not, and Robinhood just goes all the way up to $200 a share by December, unfortunately, or maybe fortunately, whichever one, I'm cool with either way. I'll just have to roll out my covered calls into next year, and hope that this 2026 correction actually does happen. The only thing I am kind of worried about though is my tax situation, right? Because I'm not fully yet educated on exactly how option premiums and rolling works when it comes to taxes. So that is one thing I am kind of worried about, but it is what it is. We have ProMe that says I've started to move my wins to less riskier stocks in preparation for a small market correction, albeit with a smaller portfolio. And obviously, I'm not a financial advisor, but just some things to note. If you have a smaller portfolio, it doesn't really matter what you do. Like if you sell covered calls, if you hedge, buy puts. At the end of the day, you have a small portfolio. So the biggest thing for you to do is to just keep, always be on the lookout for new opportunities, obviously, but also building up that savings so that when the next bear market or correction hits, you'll be fully ready to take advantage of the opportunity. And when it comes to your decision to move your wins into less riskier stocks, keep in mind, if you think about it, there really isn't a quote unquote less riskier stock, right? You could view Pepsi as a less risky alternative to Robinhood, but at the end of the day, both of those companies theoretically could go down 50%, right? Robinhood could go down 50% next month, literally. And correct me if I'm wrong, but Pepsi during this past year has also had a very big correction, right? So just because a company is quote unquote stable doesn't mean that it can't go down a lot. So I'm not sure what stocks you're in, but if there is a bear market, just remember stocks can go down. We have Carter that says I'm up on my leap options on Hood. Congrats to you. We have Sarge Beats that says fourth Q just started, man, hang on. And I'll try my best to hang on to all the Robinhood shares, but we got to get this correction. I mean, we have Leverage Finance that says nah, no way you have that much with Robinhood. I mean, honestly, compared to some of these other people, I don't really have much. And no, this is not AI generated.